Okay, so I'm just going to get straight into it now, guys, because waited long enough. So GBPJPY, since last week, if you remember, I did call a short on GBPJPY. We were around this area here, and as you can see, we did fall, and yesterday we fell as well, quite strongly to the downside, retesting this key medium support area here, medium-term support area that is. And we've now bounced strongly to the upside. Now, I didn't really expect this strong selling pressure yesterday. However, it happened. That's just the market. That's what happens. However, last week I did break down, guys, and say that we do have this longer term outer trend line currently on the 4-hour time frame. Where, as you can see here, if I just get the ellipse tool, we've had 2 tests so far. And I'm expecting that third test to occur, okay, around this area here potentially. So the reason being is if I just go up to the daily, we've actually had a breach of the previous high here. As you can see, this wick, went past the previous wick, meaning that we have printed a higher high. So what I'm expecting now is a potential retracement to find a higher low before bouncing and continuing to the upside. Now, what I'll do is I'll just draw this resistance area here so you can see it clearer. I'll just draw it using the daily time frame. This is good for you guys because you get to see how I actually analyze the charts, how I go through the motions of analysis. Sorry, I just need to mute everyone so it's not disrupted. So what we do here, guys, is I simply take the high of the previous candle, previous swing high, and I then bring the area down to the close of the second candle, which is this bearish candle here. And what that enables me to do is get a nice resistance area. As I've mentioned before, guys, a resistance is not just a single line, an area of resistance is not just a single line, it's an actual area. And it's very, very important that you draw your 4-hour resistance and support areas in this way. So once again, we take the high and connect it down to the close of the next candle, whether it be at support or resistance. So in this instance, we've got the resistance candle here because it's bearish, and I just simply like to make that red so I can quickly identify that it's resistance. It's disappeared, so I'll just draw it again. Okay. So you can see here, we've breached that previous resistance, guys, and currently floating below it. So all I'm looking for on the 4-hour time frame is that selling pressure to the downside for that lower high. And just to show you guys a neat trick, which I like to use quite often, what I like to do is actually take the box consolidation of the current area of consolidation, which we've got here. Okay. And once we've got this box consolidation, guys, all you do is you get the arrow tool, okay? Measure the length of this box consolidation, as you can see, okay? And as you can see here, we broke past it yesterday, like I mentioned. However, we then pushed back into it. If I simply take the measurement of the box consolidation and just put the arrow tool below it, we can expect about the same range of this box consolidation to happen to the downside. And as you can see, we would essentially get that retest of the ascending trend line along with a possible either false breakout and then push back into the trend line, or even just a wick to complete this this arrow tool, or this or just mimic the range which we had here. And you'll also find that if we do get that exact range move, we should just about get a test. Yeah, so we should just about get a test of this previous resistance area here, guys. Okay. So this previous resistance should now be tested as support, which is what I'm expecting for GBPJPY. Okay, so this is what we're currently looking at. As you can see here, we've got the EMAs, the fast period moving averages, currently crossed down to the downside, meaning that overall we do have this, bearish, this bearish bias does hold weight. overall. So we've got a higher probability of the price action actually moving to the downside and getting that third retest of the ascending trend line. So if you want, guys, just take a screenshot of that, and then you can sort of just overlay what I've got on my chart onto your own, so you know exactly what you're looking for. And with regards to potential entries on this pair, guys, you would just be simply looking for a potential reversal formation in the form of either a pin bar, bearish engulfing bar, or a evening star, which doesn't look like will happen, the evening star. However, a bearish engulfing bar or a pin bar will be more than enough to warrant an entry to the downside. Okay, so what we've done is we've stacked the probabilities. We've got multiple areas of resistance here. Okay, and we're just waiting for that signal in the form of a candlestick formation, either on the 4-hour time frame or the 1-hour time frame, whichever you prefer. I prefer the 4-hour time frame, but it's all up to your preference. So I'll leave it up to you for the entry. Okay. Next, what I want to do is go over to the euro yen, because we've got quite a similar setup, guys, here. So you might actually benefit from taking both the euro yen and the pound yen. So once again, I've got the key levels here mapped out for you. 132 is a very, very strong area of long-term resistance, as you can see here, previously respected as support, now being respected as resistance. We've got this previous resistance area here, guys, which was tested as support previously. As you can see here, we're currently ranging between these areas here. We've also got that long-term trend line on the 4-hour, the outer trend line, sorry. As you can see here, once again, if I just get the ellipse tool, we've got the two bounces. So essentially what you would do is, if you would trade this pair to the trend line, you'd be implementing a third trend line bounce strategy for going long on the euro yen if you were looking to take both sides of this move. Okay. So I am expecting this to test this trend line. Okay. Also, if I just show you the similar thing that we've got going on here, as per the GBPJPY. So once again, I'm taking the high and low of the previous swing high. And you can see, guys, that we actually are in that area now, which is why it's very, very important to draw out your resistance areas properly, because it doesn't necessarily, you know, it won't necessarily breach it. However, if we do get within the resistance area, a reversal candle formation could actually hold very, very strong weight for taking a trade to the downside. So if you had this resistance area previously on your chart, you could have actually taken a nice sell trade off this bearish engulfing bar, or even this pin bar here, and placed your stop loss at a logical stop area, which would be just above the wick. And you could see that even though we did see some buying pressure, we wouldn't have got stopped out. You would have just stayed in that trade until it reversed, which it did. Or if you didn't get in on the pin bar, you would have got in on the bearish engulfing bar. Okay. So now what we're looking at the moment is a potential move to the downside. Now, with regards to entries on this, guys, we've already got this bearish engulfing bar here, which I know many of you have actually entered in on, this bearish engulfing bar. So looking for potential future entry signals, I'd be, you know, waiting in on a pin bar, or sorry, just bear with me. So I'll be waiting in on a pin bar or a potential bearish engulfing bar once again. However, not very highly probable that we'll get that on the 4-hour time frame. We could essentially be looking for it. Oh, here we got it here on the 1-hour time frame. So, you know, this bearish engulfing bar here, if I just put a horizontal ray. So this is a very logical price here at the moment, 131.68, very logical price to be getting short and placing your stop loss just above this bearish engulfing bar, guys, which would be a very, very logical thing to do. So we've got quite a lot of people coming in now, so I'm just showing out the videos, because I don't want you guys to be in the video. So Yeah, so this would be a very, very logical entry for the euro yen, guys, placing a stop loss just above here. If I go back to the 4-hour time frame, we can see once again where we've got this this box consolidation. This was a previous area of box consolidation here. It's a logical area. Once again, just get the arrow tool, measure the length of this box consolidation. Okay, and you can see from where you take it, from where we previously, well, we haven't really tested this area. We tested it around here. So if you would just attach it from the tip of this 132 to the downside, you can see that we would actually potentially get that test of the trend line and retest this previous resistance area here, which was also tested as support as well. So this is another very, very logical trade, guys, to take. Also, guys, I want to give you a tip about getting in on pin bar formations. A nice way of determining whether the pin bar formation is valid to get in on is you would simply measure the length of the wick relative to the size of the body. And essentially, the rules for a pin bar formation is that the wick has to be at least double the size of the body to warrant getting in on that pin bar formation, because then that would mean there would be strong selling pressure. And vice versa, if we were at support, you'd be getting in on that pin bar from support, measuring out the size of the wick being double the size of the body. It's very, very important to stick to that rule, guys, and it will save you guys many, many pips or losses in the future. Okay, so keep that in mind. So that's the two hot trades that I'm seeing at the moment, guys. I'm not really seeing a potential on anything else at the moment. Me and the technical mastermind group, we are in on another trade separately from this. However, because it's NFP, I'm actually going to opt to just stick with the trade that we've got in on at the moment. However, for those who are not in trades at the moment, GBPJPY and Euro Yen is a very, very highly probable trade to take. Okay. So what I also, I'll just give you guys some time to screenshot this if you want. So I'll just give you a few seconds to screenshot that before I move on. Once again, for those guys who have just come in, the moving averages which I use are the 10 period and the 20 period moving averages. They're exponential moving averages for these two periods, and this is the 50 moving average, which is just a simple one. And if you were looking to just trade using these moving averages, what you would do is just wait for the crossover. So if it would cross over to the upside, that means we're bullish. Cross over to the downside, it means we're bearish, as you can see is the case at the moment.
Bullish.
However, what I like to do is actually stack many analytical tools together to form higher probability trading decisions. The more resistance that we've got with regards to static and dynamic resistance, the more likely that that trade will go in your favor. Okay. So just bear with me, guys. I'm just going to mute everyone, so it's not disturbing the rest of you. Okay. Right. So yeah. So for those who have just come in, I'll just go over to GBPJPY just so you guys can have a quick look at it again. So what we're looking for in GBPJPY is a potential downside move to retest this trend line here, this ascending trend line for the third time. And you'd essentially be waiting for a support, an area of support to get long overall, because we have breached this area of resistance and printed a higher high, which means that we do have a high probability of retracing, forming a higher low support, and then continuing the ascent to the upside, okay, where we could essentially see that test of 150, which is a very key long-term resistance area. So keep that in mind, guys. Okay, I'm going to move on because I've already covered that. So now, if you want to quickly screenshot that. So now I'll be going over to Now, you guys would know if you did watch last week's video that I was very bearish on AUDUSD. And as you can see, very, very nice trade, guys. Whoever got in these got in on this trade would have made some very, very nice pips. So give yourselves a pat on the back for that. And you would have simply got in on this huge wick that was caused off some news. So upon that close, you could have got in here, you could have got in here on this bearish engulfing bar, multiple areas where you could have got in on this trade and placed your stop loss, of course, at the high, just above the high. Okay, so to break it down further, guys, you would have remembered that last week I actually expected us to hold at this previous support area here and then find an area of support and then continue to the upside, which I was favoring. However, of course, I didn't get in on the trade because the support did not hold and we didn't really get a reversal formation. Okay, which is why I do favor using the 4-hour time frame. Yeah, thanks for that, Dominic. Let me just can you see the video? Because I've actually minimized it on mine, so you shouldn't really see it. So yeah, as you can see here, guys, we've got this descending trend line at the moment. Nice area of resistance. Also this previous high here, area of 4-hour resistance. Once again, we just simply take the high of the candle to the close. And if I draw in the Fibonacci, you would have remembered last week I was expecting to find an area of support at this area and at the 71% fib. However, you can see at this particular time, we've actually breached the 78.6. So that for me means that the price action has now reached no man's land with regards to this retracement, meaning that we could potentially see this drop even further. However, there's no guarantees at this particular time. I would need to see it find an area of resistance. Now, a logical area of resistance would either be at this previous area of support. Okay, we would need a retest as resistance. However, if we do just continue the selling pressure, we could see that break of this previous low here, test as resistance and continue to the upside. Or we might even find an area of support just below it and then have a nice divergence formation, which could push it up further to retest this resistance area. So multiple potential outcomes here for the AUDUSD. And I'll check the chat in a minute, guys, just bear with me. So you can see here, guys, that very, very nice trade last week. I did call this trade and I called the GBPJPY trade. So from here to the 71%, guys, would have been a very nice 107 pips. However, for the time being, guys, there is no trade on the AUDUSD. Do not be looking to go long at this particular time because we need to find a strong area of support before you do that, okay? We've breached the 78.6, which is a red light to say that we've got a potential bearish continuation going on. Potential, not guaranteed, just a potential for the time being. Now, another thing which I could overlay onto my charts just to add extra weight to that potential bearish bias is the Elliott wave. Now, a lot of you know that I do like the Elliott wave. It is very, very effective for following trends and filtering out the trend and what could potentially happen next. So if I get the Elliott wave, okay, so we can see here, guys, from this high, we would simply do this. We got the 1 wave, 2 wave, 3 wave, 4 wave, 5, okay? And you would know that, you know, if you have followed me before or been in these webinars, you'd know after the 5th wave, we then have an ABC retracement, which has already happened here. So we've got A, B, C, and upon that C retracement, this is a, you know, textbook example of the Elliott wave. Upon that C retracement, you can see we had that strong selling pressure to the downside, breaching this trend line as well, breaching the 78.6 fib, which I just had on the chart. And we could potentially see the 1, 2, 3, 4, 5 wave occur once again to the downside, okay? Now, another thing that adds weight to this is the dollar index. If I just bring that up. So you can see at the moment, we've got some very, very strong movement on the dollar index. Where we were previously bearish, we then reversed heavily to the upside, and we could potentially see a retest of this resistance area here. Okay, so if the dollar index continues to be strong, that would mean that AUD, USD, Euro USD, and so on would be heavily bearish. Okay. So there you go, guys. Broken down GBPJPY, EURJPY, giving you guys two potential very, very nice trades there, and broken down AUDUSD, giving you an overview of what could potentially happen next on these pairs. Okay, so I hope you've enjoyed this breakdown, guys, and predictions for future price movements. I'll leave it open to questions. I know there's a few of you in here, and I'm pretty sure a lot of you have questions that you would like to be answered. So I'm just going to check the chat.